Cool. I'll make this one a very, very quick one. But as I said 2 seconds ago, it's what's called sort of overextended. So if you look at this move here, it's like pretty much direct straight down kind of thing. This is on the 1 hour. This is the beauty of having this stuff on the screen and not on iPads and all this kind of stuff, because you can flick through all the different time frames. You can have a look at sort of how things are moving and all this kind of stuff. So anyway, for instance, sort of how I sort of said, look, here with the buyers, here with the buyers, here with the buyers. This is the level that I marked out in that video yesterday. And I said, hence these little arrows here. These are where the buyers are going to be. Let's unlock this. And as you can see, if you zoom in here, see how they tried to defend this line? Came down, hit it, bought up, sold down, bought up, sold down, bang, hit down. Like I sent with you that video before, I said, look, people that are long, they're going to be trailing their stops. The reason that you've got this fast move, get this out of the way for 1 sec. The reason that you've got this fast move as it came down through here is because this is people's stop losses being hit. So they've been long, maybe they've been long all the way up through here. This is a high time frame structural level. I said, look, once it goes down underneath 105, we're going to see a pretty fast move. And it's gone down 90, it's just dropped 30 points. Bang, down. This is on the 15-minute. So in the last 30 minutes, just dropped 30 points, which is pretty good. So what you kind of want to be careful to do here is, first of all, you got to make sure, like, we're talking about sort of like, stops and, making sure that you're only risking $500 or $1,000 or whatever. You need to sort of be able to either have a very quick way of doing this yourself or work out what you want to do, because most likely what we're going to see from here is this. It's going to move up here and then it's going to come down. Like I covered in the other couple of videos, not everybody's going to have their stops hit here. People are going to be buying it here, buying it here. They were going to be buying it here, buying it here. Bang, it's gone through. People accept that. And this is the style that I want to sort of trade with, is that you've tried to buy this support area. They tried to hold it, they didn't. Bang, goes through. You're going to see price probably snap back up around to this direction over here to test the underside of 105. Anybody that bought it here that didn't take their take their loss and have the stop out down here, comes back up here. They're like, hey, look, you know what? I bought it with the idea that it was going to hold this level and shoot back up like that. Like, that's what their idea was. Direction there. It failed to do that. That's fine. Obviously you're not going to get every trade right. Breaks down through the area, comes back up here. Now, you bought this in the idea of this happening. It didn't happen. That's fine. You don't freak out and lose it because you lost in 2 seconds straight away, whatever. But if it comes back up here and you can get out for zero, you take your money back off the table and then you go, okay, I'll either trade something else. I'll look down at maybe buying it. Whoops. Buying it from down here at, say, 104.50. A little bit all over the place with this chart. 104.50. Maybe I'll try and buy it from there, because I still think it, like, this is the mentality. I still think it's going to 110, 106, 107, 110, whatever. But it's better to buy it from 104.50 than it is to try and hold on this thing and then ride it through this period here, because that's opportunity lost. The opportunity cost, but it's opportunity lost while you're waiting for this move to sort of move out. So what I'm saying with this is basically I expect price to move back up here. I expect people that were long at this point that didn't take the loss, they're then going to exit their positions. That's going to give us another wave down like this. So we'll see price come up, and this price will attempt to take out these lows. I think it will, and I think it'll go to 104.50. So meaning I wouldn't enter after this has done a big, fast, long move here. If you wanted to enter this trade, you were entered where you were, or you entered as this thing broke these levels up here. But two things that you don't do necessarily is you don't buy on the first break, because very, very rarely, unless it's like a big news data event, and even then, do these moves hold. So you're most likely going to see this come up. Look, it could still come down a little bit further, but I would be looking to put an order in, or at least sort of set an alert or whatever you want. If you want to get short on this, I reckon that trade from there, 105 down to 1457, that's a better trade than trying to capture from 104.79 to 104.57, because this will have a bit of a bounce up and then no doubt we'll get another push down here, and that way then you're a little bit covered. You just don't want to buy when the move has already gone, you know, 0.75%. It's moved 80 points already. You know, there's a lot of people like you saw, like you were short, you took profit. There's going to be a lot of people that'll probably take profit off that as well. So we'll see how we go. But yeah, as I say, I would probably sort of not enter after something's just broken a key level there, because that's just stops being hit. They'll reload, and I would say buyers are probably going to have another little shot here. So I just exited one of my Aussies just because I timed it wrong, but it reached right down into my sort of area, bang, took it out, and now I'll look to reset, and I'll look to get short, probably back up around sort of like 67, 67.04, if I can again. We'll see how we go though.